$3.7 billion for a Japanese glassmaker. Tell me Apollo hasn't completely lost the plot.
They haven't. Read the Nippon Sheet Glass filings. It's a massive backdoor play into renewables. Solar panels need glass, Nate.
Sure, but their biggest Japan buyout ever? They're just chasing a weak yen.
You want to talk about chasing? Estee Lauder is apparently circling Puig. That beauty premium is the real joke today.
We're definitely unpacking that gossip right after we throw some stones at Apollo's new glasshouse. The rundown. $2 billion for clinical stage T-cell engagers. Gilead is absolutely not messing around with this Ouro Medicines deal.
$2 billion for assets that aren't even commercialized yet. I read the press release 3 times looking for a revenue multiple and just started laughing. It's a massive premium for a pipeline dream.
Oh, come on, Maya. You know how the inflammation space works right now? If you wait for phase 3 data, the price tag is $5 billion. You have to buy the dream to build the portfolio.
I prefer buying reality, Nate. But fine. They desperately need the pipeline. Keep an eye on the definitive agreement. I want to see the actual breakup fee on this one.
Speaking of reality, Olympus Partners just carved out the retina business from EyeSouth and flipped it to Cencora for $1.1 billion.
Nothing says healthcare private equity quite like unbundling the human eyeball for $1 billion.
As a former banker, I deeply respect the hustle. Why sell the whole eye doctor when the retina commands a premium?
It's actually a smart bolt-on for Cencora. They get immediate scale in a high-margin specialty. Same reason Zijin Mining just dropped $2.6 billion on a domestic Chinese rival. Pure scale.
Okay, I have to ask if you saw the pig chart this morning.
Up like a rocket. The Estee Lauder merger whispers are officially deafening.
If that happens, it triggers a massive consolidation wave in luxury beauty. Everyone is going to be buying everyone.
We're tracking that closely. But honestly, the weirdest headline I saw today wasn't makeup. It was Blackstone kicking the tires on a stake in the Global Cricket League.
The Cricket League. Private equity buying sports franchises is my absolute favorite new genre of deal making. They just can't get enough live sports.
The cash flows are incredibly sticky. People will cancel their streaming subscriptions way before they stop buying tickets to see their team.
But we need to talk about the actual heavyweight of the day. Apollo dropping $3.7 billion on Nippon Sheet Glass.
The biggest private equity play in Japan we've seen from them yet.
They're going all in on automotive glass and renewables.
I spent my morning digging into Nippon's balance sheet, and I found some very interesting footnotes about why Apollo is suddenly so obsessed with undervalued Japanese industrials.
Hold that thought. We're unpacking the entire Apollo Japan strategy right after this. The big one. $3.7 billion for literal sheets of glass. I love private equity.
You say that like they are just buying windows for skyscrapers, Nate. Nippon Sheet Glass is a massive play on automotive components and renewable energy tech.
I know, but still. Apollo drops its largest check ever in Japan, and it is for a heritage industrial company. My old MD used to say you do not get fired for buying enterprise software, but apparently at Apollo, you get promoted for buying glass.
Well, look at the multiples. Western PE has been circling Japan for 3 years. The yen is weak, and corporate governance is finally waking up to shareholder value. But I actually have a bone to pick with the whole renewables narrative on this specific deal.
Wait, you do not buy the solar angle?
I read the filings. Yes, they make the ultra-thin glass for solar panels. But if you look at their actual revenue breakdown over the last 4 quarters, the vast majority is still legacy automotive. They are a car parts supplier masquerading as a green tech play.
Okay, but that is exactly why Apollo is buying them. You buy the boring legacy cash flow to fund the high growth pivot. It is classic buyout math. Apollo takes them private, strips out the quarterly public market scrutiny, and aggressively scales that solar division.
For $3.7 billion, you are paying a premium for the solar story today, but you are taking on all the cyclical risk of the global auto market. If global car sales slow down next year, Apollo is left holding a very fragile bag.
Fragile bag, because it is glass.
I am ignoring that.
You are ignoring the macro setup here too? Japanese industrial assets are chronically undervalued. Apollo is just following a very clear playbook. get in streamline operations, maybe spin off the auto division entirely in 5 years, and list the renewables side at double the multiple.
I will give you that. If they actually split the business, the math starts to work. But executing a carve-out of a heritage Japanese manufacturer is notoriously brutal. The cultural friction alone usually eats up half the projected synergies. They have union agreements, legacy management, local suppliers.
True, but Apollo did not write a check approaching $4 billion without a ruthless integration plan already sitting in a slide deck somewhere.
Oh, I am sure the slides are beautiful. I just want to see if the factory managers in Tokyo actually answer Apollo's emails when the restructuring starts.
Fair point. We will see who cracks first.
Please stop with the glass puns.
I cannot help it. It is so transparent.
We are moving on. Speaking of paying massive premiums for a good story, I want to talk about T-cells, because Gilead is reportedly about to drop $2 billion on a clinical stage biotech, and I have some serious questions about their trial data. Voices.
I am looking at these analyst notes on Puig, and honestly, the beauty sector analysts need to calm down.
They're predicting a massive consolidation wave again, aren't they?
Exactly. Puig's stock surges because of confirmed merger talks with Estee Lauder, and suddenly, every watcher is screaming that the entire luxury beauty space is going to roll up by Christmas.
I don't buy that for a second. Estee Lauder is putting out fires internally. They aren't in a position to trigger a wave of anything right now. This is a very specific defensive play.
See, I disagree. If you're L'Oreal or LVMH and you see Lauder making a move for Puig, you have to look at your own portfolio. It's classic FOMO M&A.
FOMO is not an investment thesis, Nate.
Spoken like someone who never sat on a beauty sector pitch. But fine, let's look at a sector where the wave is actually happening. Japan.
The Apollo deal, $3.7 billion for Nippon Sheet Glass.
Right, analysts are calling it an aggressive pivot by Western PE toward undervalued Japanese assets. I hate the word pivot here. It's not a pivot, it's a gold rush.
A gold rush with a very specific target. Everyone is focusing on the automotive glass side, but if you look at Nippon's disclosures, the real juice here is the renewable energy applications. Solar panels need specialized glass.
So Apollo is basically buying a pick and shovel play for the Japanese solar market. That's actually smart.
It's brilliant. $3.7 billion is Apollo's biggest PE play in Japan to date. They're not just parking capital for a quick flip.
Speaking of parking capital, did you see the note about Blackstone kicking the tires on the Global Cricket League?
Wait, really? Private equity buying into cricket?
The appetite for live sports is literally bottomless. From solar panels to cricket bats, there's nowhere PE won't go.
Well, they might want to look at biotech next because Gilead is apparently writing a $2 billion check that we need to unpack. Spill the tea.
Can we talk about Puig's stock chart today? Because it looks like an electrocardiogram of someone who just drank 6 espressos.
The Estee Lauder whispers finally leaked. I was wondering how long they could keep a lid on that.
A massive consolidation wave in luxury beauty. Honestly, I love it. Estee Lauder needs a win and Puig has the momentum.
I'm looking at Puig's multiples right now, and I am not seeing the synergy. Estee Lauder is paying a massive premium just to buy growth they couldn't engineer internally.
Oh, come on. You're looking at this like a spreadsheet exercise. Beauty is about brand heat. You buy the heat. You don't build it in a lab.
You should be able to when you're a multi-billion-dollar conglomerate. Buying heat is just an expensive way of admitting your internal marketing is broken.
Spoken like a true cynic. Wait until you hear what Blackstone is kicking the tires on next.
Let me guess. Another software roll-up?
The Global Cricket League.
Wait, really? Cricket?
Live sports, Maya. Private equity is absolutely starving for live, unskippable, captive audiences.
Okay, that actually makes sense. You get broadcast rights, you get massive international viewership. But Blackstone managing a cricket league? I'm just picturing a bunch of New York buyout guys in pristine white sweaters trying to figure out what a wicket is.
It's a phenomenal mental image. But the math works. The valuation of sports franchises is completely detached from normal EBITDA multiples now anyway.
Which brings us right back to my issue with the Estee Lauder deal. Everyone is just paying whatever they want and calling it strategic.
Well, speaking of paying whatever you want for strategic assets, wait until we get into the footnotes on Gilead, dropping $2 billion on Ouro Medicines. Tomorrow's radar. I'm refreshing the SEC site tomorrow morning just to see if Gilead actually swallows that $2 billion price tag for Ouro Medicines.
Oh, they will. They desperately need those T-cell engagers for their inflammation portfolio. But $2 billion for a clinical stage asset is a massive premium.
It's classic pharma panic buying, but my eyes are actually on the dirt. Kodiak Copper is drilling like crazy right now. They have to be the next target after that Hudbay acquisition spree.
I completely disagree. Aggressive expansion drilling doesn't equal a proven resource. You're just falling for a shiny pitch deck again.
Hey, my banker instincts pay the bills.
Barely. I'm watching the beauty gossip. Puig's stock just spiked on confirmed merger talks with Estee Lauder.
Wait, really? Estee Lauder?
Yep, massive luxury consolidation wave incoming.
Wow, okay, one last rumor to watch. Blackstone is reportedly kicking the tires on the Global Cricket League.
Cricket? You're kidding.
Private equity can't get enough live sports franchises.
I'll believe the valuation when I see the actual term sheet. See you tomorrow.